What's going on, guys? Today is the 23rd of January 2026, and we are making history. The price of silver just reached $100 per ounce. This is the first time ever that this occurs. If we look on the 4-hour chart, it's just green, green, green. Uh, I'm expecting some type of a huge whiplash eventually, but I have no idea how far it's going to go before it does that. I started to liquidate some of my positions into my leverage account because I was long since the 60s in some of my positions. So I took half of my profits so far, and I'm just trailing this beautiful uptrend that we're seeing right now. As far as gold is concerned, it's almost about to hit the $5,000 an ounce mark. It is also going up a lot. And what does it mean for the Snowball Experiment? Well, it's positive, of course, because most of my positions were in precious metals. I believe we're up over I think I'm at 30% into precious metals, so this is very good for the account. We keep compounding. Right now, the account is sitting at a healthy $8,700 with an invested capital of 7,700. So I'm up $1,000 on that small account that I've been building over the past couple 3 or 4 months. For the sake of this series, and we have silver that's up 44% since my entry. The other ones that are related to that is GDXY, which is a really high yield gold one. My yield on cost is at 51%, and currently it's yielding 48%. And the shares are up, which is very rare for something that has such a high interest. Next, we have SLJY at 35%. This one is at an 18% yield on cost with 14% current yield. What else we have? We have gold here up 41% since I entered. My yield is at 8% on cost, and it's yielding only 5.99%, but it's still a good position for establishing some precious metals exposure. As far as the income that this generates, from the precious metals, I have 23% of the income that I receive is coming from gold, and then another 6.3% is coming from silver in my top 10 anyways, and there's a few more positions. AGCC is 3%. What else we have? And GLCC is 1.8%. So all in all, I think that sums up to about 35% of the income that I receive from this small account is coming from precious metals. I'll be looking to reduce that amount because all good things come to an end, and I don't know how far it's going to go. It's possible that silver will go to $200 an ounce, but in my experience, nothing goes up in a straight line, so there will be some really violent retracements, in my opinion, as it has happened in the past, and it wasn't rare for silver to retrace 30-40% before resuming its upward trajectory. So that's what I'm expecting. So I will not buy more of it. I will just keep investing into other sectors that I feel are undervalued. And as there are retracements and as I stop investing into the precious metals sector, my exposure will diminish and I will be able to diversify my way out of that overexposure into precious metals. That's the goal anyways. Now let's go back to my little spreadsheet that I built. I have a target of 20% into precious metals, which is going to be a mix of different precious metals. Like I'd like to have palladium and platinum in there as well, gold and silver. But right now my current exposure is at 30%. So I'm 10% overboard in that sector. And the energy sector is at 3.63 instead of 10, so that's pretty low. So I could invest in energy, but if you look at the category of commodities, I'm already at 40% target that I wanted to have. I've already reached that point, and I'm up. I'm overboard 1% in that category. So looking at the least invested category, it's the defensive stocks, and within those there are consumer staples, utilities, and healthcare that I need to focus on. So it's out of these that I will reinvest. So right now this data is not quite up to date because today I made some purchases to in the consumer staples, which I will share. But at the end of the day, my broker will be able to give me the real data, and I will upload it into the spreadsheet and show you in the next video. So right now, if we look at my little buying system that I've built, I know I need to be invested into consumer staples, utilities, and healthcare as a category. And the most buyable one is consumer staples right now. So this is why I'm going to present to you the stocks that I invested in today. So the first stock that I bought today is Conagra Brands. This is a consumer staple that has a current dividend yield of 8.01%, which is pretty good for a stock like that is defensive. And right now, my theory of why these consumer staples have been going down a lot, of course, it's always offer and demand, but why the demand went lower is because I think everyone went into technology and are hyped about the future. But my belief is that if there is some type of panic in the stock market, I think people will try to find haven into the defensive sectors, which this stock is a part of. And it has had a drop of 60% or so, and right now it's sitting at the support. And the reason I bought it is because we have some really big volume over here, as you can see. And at this support here, I think it's a good place to start a position for me in order to probably get a bounce from and have some capital appreciation while I collect the dividend. If ever it goes lower, I'll probably average twice at these levels, and then I'll let the position either die or rebound, whichever case happens first. But I'm not going to touch the stock again because this is a non-leveraged position. I personally don't use stop losses in non-leveraged investments, but I always religiously use them when I trade with leverage. But right now, the goal is to just establish a small position and expect for a bounce, and then see from there. The second stock that I bought is Flowers Foods, which also is at an area where I think it's viable because it really had a flush out of the system. People have been panicking, and the volume is crazy high right now, and it's just turned from selling to buying. The majority of the volume was towards the upside, and I love these type of patterns where we have this type of candlestick, which suggests a retracement or a bounce off of it, a rebound. So these are two stock. Flowers Food has currently a yield of 9%. Typically, this stock is about a 3 or 4% dividend yield. It had a really big run up in the past. It's an old stock; it's been around forever. Of course, here you can see that it has been struggling, and now it basically repriced. So I'm expecting at least some type of bounce off of this point of support here. And if it breaks, same story. I'll just collect the dividend. If they cut it in half, maybe I have an opportunity to buy it even lower if ever the investors start to panic, as they have been. So these are the two stocks that I bought this week. So I'll make an update in the next video about how this affects the percentages that I have into consumer staples. So that's it for today. I'll see you in the next video.